Hello, chart watchers and DecisionPoint faithful. This is the April 18th, 2022 episode of DecisionPoint. Lots going on today. It was a very interesting market day. This morning, it was pretty crazy, pretty hairy, but we did end up finishing on the positive side. We'll take a look at those charts and see if that means we're going to get more upside. I'm not so certain about that, but we shall see. I will be covering those market overview and indicators, our decision point indicators. Carl is not with us here today. My brother is in town, so they are visiting, and I will join them after I finish work today. So where is the strength? We're going to go through the sectors. I'm going to look at the bias on those charts using our under the hood indicators to give you an idea of what we're seeing. And then I'm going to finish, and I put in parentheses an S, but today I have one diamond of the week and I don't even trust that one. So it is the only scan result that I got today from my Diamond PMO scan. I always know the market's in trouble when I'm not getting the results I should see in my Diamond scan, and that was definitely true today, but I will show you the one and only chart that did come up in the scan. Before we get started, I do want to remind everybody that I do a free live trading room on Mondays. We've been having a lot of new people join us. Would welcome you to do so. All you have to do to register is on our website. You'll see the register now on our homepage. You register once, it's recurring every Monday. You'll get notice and you can join us or not, because we do send out the recording for the free trading room out in our DP newsletter on Monday afternoon. So if you don't want to sign up for the trading room, you will always get that recording available if you sign up for our free newsletter. So that's also on our homepage. All right, so let's start with our signal scoreboards here. And I will say that Carl has put together one for the market indexes. We've always used just one for the sectors, but now we decided it might be helpful to see what the intermediate term trend model and long-term trend model signals are for the major market indexes. Currently, this is where it stands. I'm going to do a bit of research after the close, and I will see if that is still the case. But as you can see, small caps still struggling. We've got sell signals in both the intermediate and longer terms. I should tell you what an intermediate term trend model signal is. Intermediate term, we measure whether the 20-day EMA crosses above the 50-day EMA. That's going to give you the buy. And then when you get a negative 20, 50-day EMA crossover, it's going to either be a neutral or a sell. It's a neutral if that crossover, that negative crossover of the 20 and 50, it'll be a neutral if that crossover occurs above the 200-day EMA. When it does not, then it becomes a sell signal. Long-term trend model, a lot easier because we're only looking at golden crosses and death crosses. If it's on a buy, that means it's on a golden cross with the 50 above the 200-day EMA. If it's a sell, it's on a death cross where the 50-day EMA is below the 200-day EMA. So as you can see, as far as the sectors go, the only intermediate term buys are in some of these stronger sectors. But today it was an interesting day because consumer discretionary, comm services, and technology, the ones that have really been struggling, did actually see some rally today. And so we'll go ahead and look at some of those charts right now. So I'm going to start off as usual with the SPY, and we'll look at what's going on there. We'll look at the broad markets in general just to see if we're getting the similar information. So we did finish the day higher compared to Friday, but as you can see, we set a much lower high and a much lower low. So I'm not considering this an actual price bottom yet. We need to see a higher low in order to get an actual price bottom for the SPY. I've been looking at the 410, 415 area as support. We could certainly see a bounce off of this. We'll have to look at some of our other indicator charts to see what's going on. But I suspect today is going to be a climax day. We had the VIX puncture the lower band on our inverted scale. That tells us that, of course, the market participants were very bearish to start the day, but they are starting to feel a little less nervous at the end of the day. So we have these punctures of that lower band. And typically when you get punctures of the lower band, you will see just a little bit of upside. Could be one day like we saw here, could be a few days, or we could end up with a nice long rally coming out of one of those punctures. But we don't know for sure. I always say that what I look for is the next 1 or 2 days when I get these sort of climactic readings on very short-term indicators. So let's look at exactly what it was that happened with the SPY today. This is the 5-minute candlestick chart. And actually, now that I'm looking at it, I think I would like to go with only 2 days. There we go. So big drop on the open. I was doing the trading room pretty much right in here, right where we got that top. And so we saw a lot of stocks that I was looking at hitting some buy points, or at least some non-sell points, because right now a lot of people are looking not necessarily expanding exposure, but what to do with current holdings. And that is something that I do cover in our free trading room, just to give you thoughts on what I'm seeing and what my rules are, if you will, for short-term trading and using a 5-minute candlestick chart for your trading. So we had a lot of interesting looking 5-minute candlestick charts this morning in the free trading room. And we can see this is a pretty interesting one too. We had a nice little bottom here, kind of rounded, kind of not. Looks like kind of a reverse head and shoulders sort of appeared here, with the neckline being right through here. So we got the breakout. And the expectation is of this pattern, it would be the height of this pattern, which is, let's see, 1, 2, 3, 4, 5. And if we come here to where the breakout point was, we'll say 1, 2, 3, 4, 5. We're almost to that upside target of that reverse head and shoulders on the 5-minute candlestick chart. So, overhead resistance is right here at 430. So if this is going to be for real, we're going to need to see that breakout, I would say, above 430, so that it gives us a little bit of comfort in that we could see a continuation. But I'll tell you, after seeing those charts this morning, I'm not so certain. I feel like this is a little bit of a fake out. I wouldn't even say a fake out breakout, because we really didn't get anything like that. So we're still in a declining trend. That hasn't changed despite the reversal that we saw today. So let's look at our climax chart, because this is going to help us read what's going on today. Now, unfortunately, I don't have all of my ratios updated at this point, but looking at this, despite having really high volume and a positive day, we did not get climactic readings on breadth. We have that reversal on the VIX. And again, high total volume, but it does not look like it's going to be a climax day. And our last climax was a downside initiation. So we did see the follow through on Friday, and really we're seeing some follow through on that today as well. And without getting an upside climax of any sort, I would have to say that we're still under the pressure of that downside initiation that we saw. But I am open, and I will be watching tomorrow to see if we can get a higher low, and that would give me a little bit more confidence in what is going on the reversal midday today. So let's go ahead and look at our Swenlin trading oscillators. And I will tell you that what I'm going through right now is what we typically go through in a DecisionPoint alert. I will just show you very quickly. So this is our website, our blogs and links page. There are my diamonds. That's your stock pick newsletter. And then we have our DP alert. But you will notice I have a different chart to start. It's like a lead article. And then we look at all the same charts that I'm talking about today. But I also do an RRG for you and analyze that. We have the market updates. And there you go. There's a climax chart right here. New highs, new lows. Here's our Swenlin trading oscillators, on and on. bias assessment. And then for those executives on the go or those soccer moms on the go, you can just read the conclusion of these, and I will give you a really good summary of what I'm seeing going forward. We also cover Bitcoin and interest rates and the T-bond, 10-year, dollar, gold miners, and oil and bonds. So all of that you get every single market day. So I just wanted to point that out so that you would know what you're seeing here. You don't have to see just on Mondays when we do the show. If you become a subscriber, there you are. So we're not going to have all of our participation readings right now. So I'll have to kind of wing that. But we do have what's going on with our Swenlin trading oscillators. And as you can see, they reversed back here on that bar right there, that candlestick. And that's where we were starting to see the decline in this market begin. So the Swenlin trading oscillators did give us the high sign. And honestly, when I saw this and then followed by a smaller contraction on the STOs, so tall one, short one, when I saw that, that had me very worried because it looked a lot like what happened back here. We did not come up and touch the top threshold. It never even came close to being overbought. These are the kind of signals that tell you that, you know, the market is going to be in decline. The market is struggling to see the upside when our indicators do this. And like I said, these are not up to date, but you will notice very, very poor participation right now. Only 25% as of Friday had price above their 20. I will not be surprised to see both of these numbers move lower. Only 16% of the S&P 500 has rising momentum, has a PMO that is turned up. Personally, I don't buy stocks unless the PMO is turning up. So there's not a lot of selection there. And it makes sense that my Diamond PMO scan is not coming through with much. When we look into the intermediate term, we had a little bit of a move on the upside on these ITBM and ITVM. You can see where it reversed just a little bit on the move that we got up here. You can barely see it, but in any case, what's most important is that it is still in a declining trend out of overbought territory. And there is plenty of downside for this indicator to endure, if you will. It can accommodate much more downside on the market before we even start to look at oversold readings. So intermediate term is very, very weak, does not look good. I mean, just looking at this in a longer term, I mean, this is a pretty clear rounded top here. So again, not a lot of good news to report today, but it's the news you need to know. All right, so the last one I'm going to do is my bias assessment chart. And this one I want to explain just a little bit more about how these percentages work and as far as our bias. So Silver Cross Index, how many stocks have a 20 above the 50? About half of the S&P, which isn't terrible, but we do have a negative crossover and we can see that Silver Cross moving lower. The Golden Cross Index, how many stocks have a 50 above their 200, are basically those stocks that are still in sort of a bull market configuration, only 53%. Now, what's really the important concept that I wanted to talk about today is looking at the percent stocks above their 20 and above their 50 and 200. So one of the things that you will note when the bias is getting poor is that these percentages are going to be going from lowest to highest. You're going to see the breakdown first on the price above their 20, then that's going to be followed by more breakdown here and followed by breakdown here. So you don't want to see the lower reading on top because that's just telling you things are getting worse and worse. And when you have these percentages below the Silver Cross and Golden Cross indexes, that just adds insult to injury, if you will. It just means that the picture is even more bearish. So in our estimation currently, there is a bear market bias in all three time frames: short, intermediate term, and long term. All right, so let's go ahead and look at a few of these other asset classes. Bitcoin. So Bitcoin, man, I have been waiting for a good breakout, and I thought we finally had it right here. We had this lovely cup. This was the handle, and we were getting the breakout, and now it has fully failed. And that handle, if it's a handle at this point, is still moving lower. So I am going to call this cup with handle pattern busted. But you can see that Bitcoin is trying to reverse a little bit here off of this support level, but I am looking for it to move down to at least 37.5 before it really starts to rally. And honestly, looking at the way price has been reacting, even when we started getting some positive indicators like stochastics rising, it just fell apart when it hit the 20 and 50-day EMAs. This is not a good look for Bitcoin. Let's check out the dollar, which is doing quite well. Oh, nice little doji candlestick here. They're kind of, they're usually bullish, but they're kind of a neutral pattern, really, because it tells you that the bulls and bears kind of had the wrestling match, but it finished pretty much right on the open. So they were back and forth, but then we finished on the open. So really nobody won the day, if you will, except we did see higher prices yet again on UUP. What I would caution, this looks great because we had a bullish outcome to a bearish pattern. That's a rising wedge right there, those dark blue lines. So the expectation had been, and I was looking for it when we started to decline here, a breakdown from that rising wedge. We're not getting that. We got to move outside of that. So we had a bullish conclusion to a bearish pattern, and generally that is considered especially bullish. The indicators look great here. The only complaint I have right now is that the PMO is overbought and the RSI is overbought. But you know what? If you are in a nice rising trend in an excellent sort of bull market configuration like the dollar is right now, overbought conditions can just continue to persist. They can just continue on. Similarly, oversold conditions can do the same thing in a bear market. So right now it's configured positively. It's hitting the top of that rising trend channel. And that, as I told people in the trading room, does have me just a little bit concerned about the dollar, because typically, you hit the top of a rising trend channel and you pull back, and then you start making your way back up past that prior top. So I would just be a little careful here, especially when you look at the 1-year chart, which you can see the longer term rising trend channel was broken out above, which again is very bullish, but it's also overbought. When you start getting these kind of parabolic, or in this case, almost vertical rallies, they are very hard to sustain. So I would watch stochastics before anything else on the dollar. And of course, for DP Alert subscribers, I will be doing just that for you. All right, let's look at GLD, and then we'll look at the dollar gold chart. But you can see that gold, even in the midst of this decline and bear market, kind of a move going on, gold has not provided the safe haven that everybody expects it to. We ended up with a bearish rising wedge, and we got the breakdown from that on Friday. And today it just continued to slide with a big gap down, holding support. We do have this little support zone here between 175 and these lows here at about 177-ish. So there is a strong support zone. If gold is going to recover here, it really needs to hold this support zone, or at worst, go to the 200-day and reverse. If we see a reversal out of this, if we don't get the reversal out of this support zone, it could get really ugly here for gold. But I am of the opinion that now that we're starting to see possibly oversold readings on some of these indicators, that this support zone ultimately will hold. And dollar gold, you can see it's a pretty ugly drop here beneath that level of support. So, but this is the one I'm watching now, that support zone, 1875. All right, I got to move through here. So I have a little time for the sectors. Gold miners, pretty ugly. After we broke down from this rising wedge, I pretty much told subscribers I'm not liking them. Probably a good time to cut losses or book some gain. And we did see that breakdown Friday below the 50, and now we're down and testing the 200-day EMA. So not a good look right now for gold miners, and participation has just fallen off the charts here, only 3% with price above their 20. All right, let's look at the yields. They resumed their move back up today. And we can see with the 10-year yield, we're getting that breakdown from that rising wedge, but it held the bottom of this rising trend channel. I'm not so worried about this wedge. I'm really not expecting yields to pull back much further. Certainly could, but at this point, rising rates seem to be the norm, which brings us to TLT, which is really struggling. And honestly, when I look at this does look like a pretty nice bottom here on TLT, but the indicators, the RSI is rising, but it's negative. PMO is still flat. It's not really showing us anything encouraging as far as this being a nice bottom on this particular price chart. And stochastics are already looking a little bit ugly. All right, let's hit some of these sectors and see if we can find some strength. I am going to do a view all. I want to see these all on one page to give us some focus here. So what I look for is PMOs moving higher. I don't see any. So right now, momentum is pretty much negative in all of the sectors. This might have discretionary, nope. It has a top beneath the signal line. So, really, as far as where's the strength, there really is none right now. So that said, it's probably a good time to get yourself positioned more in cash, maybe consider some shorts. I personally don't do options. I generally don't short, but in this sort of a market environment where there is nothing to be had here as far as moves. But let's look this a little closer with price action. Consumer staples pulled back, but are holding this support level and the 20-day EMA. I think of all the sectors, this is one that I do still have a little bit of faith in, because we do see some pretty decent participation going on. We have that silver cross above 90%, golden cross above 78. This is still a pretty healthy sector when you look under the hood. Discretionary, I did pull that up momentarily. Double top. Yes, we got a little bit of a reversal, but it dropped below this support level in the short term. So yes, we got the reversal, but we're really not seeing what we need to see down here. If we get some pretty nice participation readings, I might feel differently, but currently I'm not seeing anything different here. I still don't like consumer discretionary, although I know there are a few pockets of strength in there. XLRE has been getting some love as far as everybody talking about it, and participation has been pretty good, but you can see it's now got its second top in overbought territory. Certainly is support here for it to hold at 48, but just be careful there as well. Let's see, what were some of those other sectors of interest? I've been watching healthcare, and it is certainly struggling here as well. I don't see anything to tell me that this is a place to be. I'm just not seeing much of anything anywhere. The two strongest leadership next to consumer staples has been energy. Energy has fallen out of the sky. And you can see that participation in the short term really got damaged. It's so far not damaged in the intermediate and longer term, but we will have to watch carefully, because remember, I don't want to see the lowest percentage on top. Less above their 20 means less will be above their 50, means less will be above their 200. That's a bearish bias, no matter how you slice it, even for energy. And materials, one of the last areas. It has fallen out of the sky. Of course, we looked at the gold miners chart, not a big surprise. But a big surprise in that this sector had really been showing a lot of relative strength. You can see since February, since the Ukraine war, we've seen some great outperformance by materials, but they are fading. They, like any others, hit overhead resistance and needed a pullback. This was just a little bit more forceful than I know Carl and I expected. But there you go. That's what happened. It dropped below the 200, but we did at least get price closing above that 200-day EMA. Still not anything to write home about. I know my exposure right now is currently 20%. I expect that to move down to 10 or less by the end of the week. I have stops set very tightly. I'm surprised none of them were hit today, but there's a good chance they'll be hit into the week, depending on if we get a solid reversal in the market, which I'm just not convinced. All right, we have just enough time for the diamond of the week. So again, if you're catching this, you missed the beginning. The Diamond PMO Scan is my primary scan that I use for getting my DecisionPoint diamonds that I present, my diamonds in the rough. And that's in the DP Diamonds newsletter. So what I do is I run these scans. I have another one, but typically I look at what the results are of my Diamond PMO Scan. And when the results get smaller and smaller, that tells me the market is more and more in trouble. So today we had one scan result, and this is it. So it does have some diamond in the rough potential. It's a bank. We've been expecting banks to, really start to rally here, given the interest rising rate environment, but that hasn't really affected the banks that much. We've been in those parabolic moves in yields, and we're just not really seeing that from most of the banks. Here is an example. Now, we did see a breakout above this area of overhead resistance, so that looks good. And we have resistance coming up here, but positive RSI. PMO is about to give us that crossover. Let me take this inspect tool off. PMO is about to give us a positive crossover or PMO buy signal. You can see that volume has been on the rise with this rising trend. And the only issue I really have here is that we have a higher top on the OBV in comparison to that prior one. That's what we call a reverse divergence. So despite lots of volume coming in, price was unable to challenge that previous top where we had that previous OBV reading. This one is performing well within its group, but the group is performing in line with the S&P, so that's not saying too much. But it has started to move and outperform in this final week. I will say it's a diamond of the week, but I hesitate to say how it seems more rough than a sparkly diamond. That's all I have for you today. Wish you good luck and good trading.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.